Hey, this is Danielle, and today I'm going to be going over a neutral trade that I did in Visa over the earnings report. So, essentially, when I'm looking at earnings, I basically just need to make a decision if I'm going to make a directional bet or I'm going to make a neutral bet. Sometimes there are tickers like this that are just, they're just kind of boring tickers. They just don't really do a lot, they don't really move a lot. So, you might say, why are you interested in Visa? Who cares? Well, it's because it doesn't usually move a lot, and you still have an event over the earnings report where you're going to see a rise in implied volatility, and then you're going to see a vol crush. And so, what that means is that the options are going to go up in price going into that earnings report, and then they're going to go down in price afterwards. And so, when you have a stock that doesn't usually move that much, you can come in, you can sell the premium directly or before the report, and you can buy it back the next day. So in this case, Visa, looking at the earnings hot zone, you can see the way that it's moved. This quarter, it had a 3.1% gap. Previous quarter, 2.4, 1%, 3%, 0.7, 1.5. So, not very big. The market maker expected move yesterday was about 3%. And so what I ended up doing was I just said, you know what? I think it's probably going to move less than that. And if it moves a little more, ideally with these kinds of tickers, what they'll do is they might spike up and then they'll come back down and they'll eventually just come and sit back right around where they were trading right before the report. And because of the volatility crush, the price of the options that were at the money goes down pretty substantially, and you can just sell them before the report and buy them back the next day. So that's what I did with Visa. If we look at the intraday chart right here, you can see the way that it traded. Basically, just as I said, here was the earnings report. It traded higher. It was trading right around 275 before the report, traded up to 283, 284, opened up this morning, and then just has basically been coming right back down to where it was yesterday all day. So this provides an options trader with the opportunity to sell an iron condor. So, what I did was I came in, I sold the 275 calls and the 275 puts, and then I bought protection. I always buy protection. Do not trade naked. Um, so I bought the 285 call as protection, which basically just means that, when you're selling the 275, you do want to have some protection because let's say I'm completely wrong and it trades all the way up to $300. You don't want to be naked short at 275. That would be very bad. And that would not have a defined risk. This trade does have a defined risk. And then I bought the 265 puts in case it tanked. So this was a $10 wide spread. I sold it for $6.96. So because it was $10 wide and I sold it for $6.96, that means that my risk on the trade was about $3. So very low risk because the credit was so high. Um, and what you'll see is right now I'm making $330. So I risked 300, I'm making 300. It's about 1-to-1 risk reward, which is exactly what I want to see. And that is about 47% of the original credit. So today, right now, it's about 12:15, the day after Visa reported earnings. So basically, it was just in and out in 24 hours. And I'm going to go ahead and close this. So this is a trade that I like to do on tickers that, like I said, they're just kind of boring tickers. They're not going to mention AI and gap up 20%. They're just going to go up, go down, stay in a little range, not do anything too exciting. But what's exciting about it is that you can be in a trade for 24 hours and use options to take advantage of a rise and fall in implied volatility. So, if you want more trade review videos, make sure you subscribe. I also have a bunch of new videos that I'm going to be creating this month. So, if you have any requests, write your requests down below. Also, check out the links below to learn more. Hope you have a great rest of your day, and I'll see you in the next one.